What we're going to talk about today is we're going to talk about the government printing money. We're going to talk about Ukraine and Russia going to war. What's that going to mean to us? What is that going to mean when the Fed gets a hold of that? Is that going to slow down their plans to raise rates? There is so much going on. Thanks for joining us for What the F Happened. We'll be right back in just a second. All right, we're back, and this is What the F Happened, a weekly show where we talk about past events from this prior week and how it applies to the markets, your real estate, your crypto, and everything else. And this week is definitely full of action. You've got Russia invading Ukraine, or are they invading yet? Who knows? The media won't ever tell you the truth. But what is that going to mean? Are we already seeing the signs of the next big crash? Because if you look at history, every other wartime results in markets going down. And then the long-term effect of wars is always good for an economy because we print more money, and that's what the government wants. It's another example of, hey, look over here, when we really should be focusing over here. We've seen that straight through the pandemic. We've seen that in everything. They drive our attention through social media and the news wherever they want us to look. So Snaggy, what do you got going on today, and what's happening in the world?
Well, man, I mean, apparently, let me just show this. Apparently, gas prices, inflation, and supply chain issues are now occurring in the U.S. economy because of this newly developing Ukraine crisis. So this is all new stuff. I don't know what we've been talking about for the last year and a half with all this stuff driving, but apparently it's all news. So the news is telling us one thing. We see what's happening in the real world, in the real markets with your money. And that's why we're here to bring you the truth, because CBS, what the fuck? Come on, man.
That's right. Yes. The news, we don't even know what to believe anymore. Folks, what do you guys believe? I can tell you what is going on. There are convoys going on in Canada. Canada is a good example of what the United States of America never needs to be. The United States just started a convoy as well, and that convoy is asking Congress and the president himself to never let the United States become Canada. So, Stephen, what's some of the good topics we can get into here?
Yeah, definitely. I mean, obviously all the talk right now is on Russia and Ukraine and what's going to happen there, but we still got the real world happening too, right? We have everything that's still going on, out there with the markets. Earnings season's coming to an end. So, yeah, I mean, where do you want to start? There's a lot going on right now.
We can start anywhere you want, man. Let's start with what the Fed's doing and how they finally they approved banning officials from trading stocks, bonds, and crypto. Like, what's that all about? Let's hit that up real quick.
Yeah, definitely. And while I'm pulling this up, I hear some music playing and whatnot. What do we got going on behind you?
Wow, Stephen, you're cutting in and out really, really bad. Is anyone else here on YouTube or Facebook? Are you guys getting a weird mixed feed from when Stephen talks? Is that coming through weird? Because it sounds awful on this end.
I was just asking, so while they're doing that, I was just saying, I keep hearing this cool music behind you. What do we got going on here? Is this new?
Yeah, so we got DJ Illmatic, who's going to be part of the show every single week. He's going to be mixing beats, coming in, putting some dramatic tunes and beats and music to what we're talking about. So everybody put your hands together for DJ Illmatic. Oh, yeah. We're trying to make this fun. We're trying to teach you, and we're trying to make this whole thing as real as possible. And music brings it all home, folks. So here we go. We got the Fed approves rules banning its officials from trading stocks, bonds, and cryptocurrencies. Where the fuck was this rule when Pelosi was doing insider trading and it was just okay? Now all of a sudden they ban it because now she's got what, tens or hundreds of millions? Do we even know? What is Pelosi's salary? I mean, is it enough where she actually should have that much money? Because I don't think so. There's a little bit of hanky-panky going on, and hopefully this stops it all. But
no. This is not Congress. This is not our elected officials. This is federal. This is Fed employees.
Oh, okay. So it's, yeah, of course, you don't want to hit the big guys, the Pelosi's of the world. You don't want to stop them from doing it. This is just what, regular employees?
Well, this spurs from Jerome Powell got caught trading. We talked about it a week or two ago, but he got caught trading a lot of different stocks that he directly was affecting through policy in the coming days. And so he got caught with his pants down, and he won't get any trouble. Of course, he's still our Federal Reserve leader, making all the monetary decisions, but he made his hundreds of millions, so he's happy. So, hey, we're going to go ahead and ban this now from anybody in the future doing it.
You know, we got a cool little comment that just came in here on TikTok. White noise is what I call every white guy with a microphone. Stephen, we're white noise, man.
That's a good point.
I don't even know what that's supposed to be, but that's, yeah, let's see. News shows live on, yeah. So we got some interesting topics coming in here, and as we normally do. But what else? So what else can we talk about, Stephen? There's so much in the news. I mean, you got Russia invading Ukraine. You've got the Fed saying they're going to raise rates 7 times, and you still have people that think that the markets are going to continue to keep going to the moon. What gives? Like, are people literally that brainwashed and that caught in this smoke and mirrors where they actually think the markets are going to continue to keep going up? The markets are going to crash and burn, but you'll never see that. Everybody's like, yeah, but the markets are up today, Chris. What do you say about that? Like, that makes no sense. It makes every bit of sense. At the end of every cycle, the markets always act irrational. When bad news comes out, the markets go up. It's very strange. It's hard to explain why, but it just signals the end. What's this one, Stephen?
Here we go. So this is from, Wall Street. Let's see here. The Wall Street Journal. So, stock market futures rebound after S&P 500 closing correction. So we've had a bunch of down days, and, I've been talking to a lot of people lately that are telling me, hey, I'm waiting right now for the markets to rebound, and then I'm going to make some decisions. Should I get out? Maybe I'll pull back some in my stock investing. But we've just, in the last 10, 12 years, we've been so programmed that every time the markets come down, they're always going to rebound. They're always going to come back up. That, I feel like at some point that's not going to happen. And all of a sudden, we're going to be down. We're going to be waiting for it to go up. It's going to go down. We're waiting for it to go up. It's going to go down more. And then what happens? It's too late. And I see this happening. And if you're young, or maybe try muting your mic one time, Chris, while I'm talking. Let's just see if that works. Okay. So let me know if I'm still echoing, guys, and that way we can know if it's Chris's side or if it's my microphone over here. But the bottom line is I've been talking with a lot of people, and if you are young and you don't mind riding that train that advisors recommend, stay in for the long haul, go for the long term, because what goes down always comes back up, and over time your money's always going to increase in values, or in money. So go ahead and just play it out in the long term. But what if you are approaching retirement, or what if you're in retirement? What if you need to live on those funds in the next 3 to 5 plus years, and you can't afford a 30, 40, 50, 60% drop in your overall investment portfolio? So what do you do there? And those are the people that I get a little bit worried about, and that we have these conversations with. Okay, maybe it's time to take control of your money and move it out of 100% equities and start getting it into some of your portfolio, into some of these other asset classes, such as real estate backed, such as precious metals, such as maybe even some crypto, if it makes sense to you, things like U.S. Treasury bonds in our all seasons portfolio. And we could talk more about that. But you see these headlines, and now Jim Cramer's on there right now. I can pull up Jim Cramer's article saying this is how you navigate during these geopolitical shit shows that we're seeing with Russia and Ukraine and things like that. And we all know the track record that Jim Cramer has. So I'm just afraid that so many people are listening that it's all going to be okay and come back, and it's not, because we've seen it happen so many times in the past, Chris.
Listen, I totally agree with that. I mean, when you look at economic cycles and you look at where we are at, I don't care if it's a short-term cycle, which we're already past. Normally that's a 7 to 8 years, sometimes a 10-year cycle. So let's just say 7 to 10 years. We've all seen those. That was the dot-com crash to 2008. We can go all the way back in time. It's always about a 7 to 10-year cycle. But then on top of that cycle, you then have the long-term debt cycle, which is usually 75 years to 100 years. We are at, depending on where you start counting, if you go from 34, we're at about year 88. So when everybody keeps thinking, oh, the government, I just had I had a discussion on one of the Facebook groups today about the markets. And it was in response to somebody saying, are the market's going to continue to go up in 2022? And I said, absolutely not. And I got beat up in TikTok. I want some of you to comment in, and everybody here on YouTube and Facebook and Instagram, comment on this. Like, do you really think the markets are going to continue to go up? And most people say, because they're looking through a microscope at a tiny little fraction of time, they say, yes, the government printed $5 trillion. There's huge demand for real estate. Of course, price of real estate is going to go up. Everything's going to continue to go up because they printed so much money. You are not looking at the facts. When the Fed raises interest rates 7 times, you stunt the ability for people to buy real estate. They can't afford the houses at the prices they are. So what is the give take? The price of real estate comes down. It's supply and demand. Doesn't matter how much demand there is. If the supply is, or if the demand can't afford the houses because of raised rates, it doesn't matter. Real estate prices will come down because of that. People then say they're printed $5 trillion. The money's still in the system. The capital markets have so much money. The Fed just came out with the minutes saying that they're going to begin to taper the bond purchases, which means they're going to slow down how much money's infused into the capital markets. On top of that, then what they're going to do, and you probably missed this, the Fed said they are going to begin to unwind the balance sheet. Most of you don't even understand that. Unless you own a business, you don't even maybe know what a balance sheet is. A balance sheet has assets and liabilities. The liabilities for the Fed are U.S. government securities, which are treasury bonds, and also, which basically most of you all know, mortgage-backed securities, the same thing that crashed the markets in 2007 and 2008. They will begin to sell those bonds to the tune of, they have $9 trillion plus, $9 trillion of bonds that they are going to begin to unwind. Because unwinding means cleaning up the balance sheet, which means selling off the liabilities, turning liabilities into assets. Those bonds, they're assets, but those bonds will begin to be sold in the open market. When they do that, folks, there's an exchange. The bond gets sold and money gets exchanged back to the Fed. When they do that, it sucks liquidity out of the markets. All this money that all of you, are enjoying and feeling rich and thinking that everything's going to keep going up will end like that. It's called deleveraging, and it's already begun. If you're too blind to see it and you think it's going to keep going up, keep doing that, because me, Steven, DJ Illmatic, and James here will be happy to buy all of your stocks, all of your crypto, your Bitcoin, your Ethereum, whatever you want to sell, 50 to 60% off. Do you want to sell me your stocks at 60% off? You don't, do you? Well, you will, because you've made the mistakes of buying high, and you should have been buying low. And then when everybody was greedy, you too were greedy. You should have been conservative. When people are greedy, you need to be sitting on the sidelines. And then when everybody's scared, when there's fear, then you get greedy. It's the opposite of what's going on out there. And everybody thinks it's going to continue, but that's okay, because every other time in history, more specifically 1920s, the roaring 20s, the same thing happened. Everybody thought they're going to the moon. And what happened? The Great Depression, folks. We are at that same exact cyclical period. If you don't believe me, study economics, study history. Listen, I don't mean to go on a rant, but this is where we're at. Now you got Russia and Ukraine. Are we going to get involved in that war? You got so many other factors, geopolitical factors that are playing into this mix. I can't even tell you what's going to happen, but it's not going to be good. Stephen, what's your comment on that?
Yeah, no, I mean, we've been talking about this stuff for a year and a half now, and it's one of those things where it's all coming to a head right now. And, I think we're going to hear more and more chatter about this Ukraine-Russia thing. I think that the news is going to pick up on it and really be able to use that to blame a lot of what's going on, just like we see a lot with COVID in this country, honestly. I mean, it seems like everything from delays in shipping to bad service to, my local Taco Bell, somebody's telling me they no longer have indoor seating. Starbucks in Jupiter, Florida, which is one of the highest wealth zip codes in America, the Starbucks in Jupiter, Florida does not open until 8 a.m. now because they can't get people to come into work in the mornings, which is crazy because when do people drink coffee? 5, 6, 7 a.m., right? So they're not even open till 8 a.m. and they're blaming COVID. We have all this stuff happening. So I think we're going to see more and more talk about this Russia and this Russia and Ukraine thing. I mean, not to harp on it, but we talked about this when we started. I mean, look at this CBS News article from this morning. The U.S. economy has been hit with increased gas prices, inflation, and supply chain issues due to Ukraine crisis. I just want you to really think about that. That's CBS News. Like, what are they talking about? This stuff's been happening. Let me just show you a couple of charts here real fast, Chris. This stuff's fascinating. Go ahead while I'm pulling it up. So look at this right here. I mean, this is, just to give you an idea, this is the FRED. So this is gas prices, U.S. regular all formulations gas prices. I mean, so this is since summer of 2020. So gas prices have been going up and up and up and up and up. And then this is the Ukraine crisis starting. And they're blaming this on this. So do you think maybe we don't listen to the news as much? I mean, another development that I found very, very interesting. Check this out, Chris. I'd love to get your take on this. So we're going to hear a lot about sanctions, right? How sanctions are going to solve everything. Well, guess what? Europe gets 1/3 of their natural gas, which is their primary source of heating and things like that and power, from Russia. And so by shutting down these pipelines and forcing this stuff, like, Europe's prices are going to skyrocket, double and triple. How long can they sustain that? What is the U.S. really going to do? I mean, check this out, Chris. I found this interesting right here. So this is a chart that shows what Russia has done over the last, you can't see at the bottom, but this is since 2008. Going into 2019 at the end right here. There you go. It shows now. And it's showing the blue line are U.S. Treasury holdings that Russia has had. The gold line is gold. So gold that they purchased in the central bank gold holdings. So they've been ditching U.S. Treasuries and buying gold. Why are they doing that? Because they know that we can't now threaten them to not pay on treasuries and things of that nature financially. They've been preparing for this for a long, long time. You got to understand, Russia and places like China, they're so much older than the United States of America. To them, 100 years is 10 or 5 years to us. So they think they play the long game. They don't care about what's happening this week like we do. They care about what's happening in the next 20 years. So stuff like this is what you really need to keep your eye on.
All right, so we got a little something special for all of you. You know, now that we can't get our Starbucks at 6 or 7 in the morning when we need it, and that's going to be blamed on Ukraine, that's going to be blamed on COVID, it's blamed on everything. DJ's got a beat for that one. I don't know if you guys caught that. Perfect. All right, so here, let's talk a little bit about that, Stephen. So, I just did a YouTube video, literally just Monday, all about what the U.S. reaction will be to Russia if they invade. It's been happening. There's 3 levers they pull: the sanctions, they cut off trade. And it's so crazy because yet 2 days later, not even 2, 1 day later, the U.S. starts putting these sanctions in. And Russia is dumping treasuries, and so will other countries. They'll dump treasuries because obviously that is the U.S. That is the U.S.'s debt. By doing that, they're sucking liquidity out just like before. That's their combat. It's happened every other time. Gold is the only steady Eddie that's always been there, so the price of gold goes up. If you guys own gold, good for you. You are seeing a nice little rise in your gold price, and you should look for an exit. Because although this is happening now, this will not continue. Gold will remain high, but eventually gold will settle back down. Treasuries will have their day in the sun. I just bought more treasuries yesterday, Steve, and I think everybody on here should be buying 20 and 30-year treasuries, because as the Fed increases interest rates, the price of treasury bonds goes down, providing an unbelievable investment opportunity. Because when should you buy stuff? You should buy stuff when it goes down, not when it's going up. Everybody else is paying attention to what's fucking going up. Why aren't you looking at what's going down? Oh, I don't want to lose money. It's going down. Exactly. Wake the fuck up and buy the assets that are going down, not up. Thank you. But anyway, like, getting off of that, like, it's just insane how backwards everybody's thinking is. You're buying assets. You're putting your money in the indexes. You're buying IULs because you think indexes are going to continue to go up. You're delusional. Indexes will go down. When they go down, treasury bonds will start to go up. Stephen, we got a really good comment that came in here from Ethan here. He was saying, can you talk, and we're going to come back to Matthews, but he said, can you talk about how real estate prices will drop compared to the dip in the stock market? This is a very important question. This is one we get all the time. And let's talk a little bit about that. Because if we just go back in history, it's a very clear-cut line that you can see drawn in the sand on how this will happen. If the stock market drops because of rising interest rates, unwinding of the balance sheet, maybe Russia invading Ukraine, so many different factors coming into this whole mix. We didn't even talk about China. So all these will drive the markets down, primarily not just because of the events, but because we're at the end of a cycle. When the stock market goes down, what will happen is people will not have the money. They will lose their jobs. Look back at 2008. Look at the dot-com. What happens when the markets drop? People lose their jobs. They get downsized. They get laid off. Their stock and their retirement portfolios drop 20, 30, 40, 50%. They can't afford to buy things. So what happens when there isn't as much money in the system, when banks don't want to lend, and even if they are lending, interest rates are higher? What do you think happens to the price of real estate? It's not even anything that's hard to understand. It's simple logic. When you take the ability away for people to buy because of the cost going up and less money being in the system, of course the price of real estate goes down. It's just a balancing act. The price has to come down to attract new buyers. Right now, the price is high because there's a lot of buyers because money's cheap. They printed $5 trillion and they kept interest rates close to zero. For those of you on TikTok that wanted the rant, I hope that's good enough, because real estate always drops when the markets drop. But it's usually a lagging indicator, which means real estate prices will fall between 6 and 8 months from the time when the stock market takes its first dip. Mark my words, set your stopwatch. That's what will happen. The only other time in history that this was different was 2008 during the Great Recession. The Great Recession was led by real estate bubbles. Therefore, real estate fell first, the markets followed, or they were correlated one to the other. And then, Steve, we got to hit Bitcoin, man. Bitcoin is trending with the markets, or are the markets trending with Bitcoin? Well, I will tell you Bitcoin's trending with the markets because the markets are much bigger than the overall cap of Bitcoin. But the digital currency thing is something very worthy of talking about. So, Ethan, I hope that answers your question. So if you're trading or planning to buy real estate, you better be looking at 3 specific things. Me and Steven always talk about this. Number one, if you buy real estate today, understand that next year, the year after, there's a very strong possibility, if not a logical, probability of factual data, I don't even know what I'm saying, your real estate will be worth less. So if you're flipping houses, get out. If you're buying real estate with the anticipation of selling at a higher price in the future, you're delusional. If you're buying real estate with a long-term buy and hold strategy and you're playing just the rental game, where all you're looking at is every month I'm making this much passive income. I don't care if the price of real estate goes down. I am just playing the income. You're good. But understand, if something happens in your life, if you lose your job, if your stock portfolio and retirement portfolio drops 30, 40, 50%, can you maintain that real estate? Will it stand at its own 2 feet? Will that real estate be something you can carry if your rents drop 10 to 15%? Have you done the research? Have you done the math? Have you looked at whether or not you could maintain and keep that rental portfolio? Now is the time to prepare, folks. The storm's here, so get ready and plan. If you can't maintain that real estate, even if it's a long-term rental, sell it and get out high, because you'll never be upset that you sold high instead of selling low. Stephen, what do you got to say about that?
No, you're absolutely right about all of that. And, one of the things about real estate, though, is real estate encompasses. Muted. I'm muted? You good? So real estate encompasses a very
All right, Stephen seems to still be muted, so I'm just going to keep going. I can't hear you, bud. So you're muted or something's wrong. Anyway, we'll keep this thing rolling.
Can you guys hear me? Just curious.
Can't hear you.
Anybody else hear me? Anybody hear me? No,
Can anyone hear Stephen, or is it just me?
All right.
Russia could care less about sanctions. You're absolutely correct. Russia gives 2 shits about the United States. Any of you looking around, do you think Putin fears Biden? Do you think Biden, when he comes on and makes these threats about sanctions, do you think Putin's sitting there being like, oh my God, I don't know what I'm going to do? No, he's laughing. The United States' leadership is weak, and the rest of the world sees that. And if you don't think the United States leadership is weak, where have you been living? It's clearly that we are at a weak state with this country. And I'm not playing political sides. I don't care if you're Republican, Democrat. I don't care if you're in the middle. It's factual that our leader right now is not capable of dealing with Putin. someone who is powerful, someone that has the ability to make moves, and somebody that truly right now is just looking at us laughing. But you know who else is probably looking at us? Korea, China. They're watching the actions of the United States to see how are they going to react. Are they going to be forceful? Are they going to do something about this? Because this is the mark. This is where the United States needs to draw the line in the sand. I look at our military and our service men and women. Are they willing to fight for this country right now? I hope so. But I don't know. What are we fighting for? Is this leadership enough to get our military motivated? If we have any service people on here, what are your thoughts? I want to know. I have a lot of friends in the military, and I'd love to have them all on to interview them to say, would you go to war and feel good about fighting for this country based on what's happening right now? What are we fighting for? You know what we're fighting for is we're fighting for freedom in our own country. We're not fighting against Russia or Ukraine. We're fighting it with ourselves. We're fighting against ourselves. We're fighting for the freedom this country was built on. That's what's at stake right now.
I just noticed this article talking about the case for Bitcoin, since we were talking about crypto. So, a lot of people have called crypto digital gold. But, as you can see here, Bitcoin fell to a 2-week low Tuesday after Russia ordered troops into the region. Geopolitical tensions and climbing inflation are among the key factors. That's led analysts to question whether its status as a form of digital gold still rings true. So this has always been one of the arguments. Is it a digital gold? But as we see gold prices hit record highs and we see crypto hit record lows, what is the correlation there and what's going to happen? And is that just a short-term correlation, or is that what's going to happen in the long term as the stock market continues to come down? Is crypto going to come down with it? And I think when that correlation decides to inverse, maybe that's when crypto really has a case for skyrocketing to the moon. But up until this point right now, I think it's just be careful in those crypto investments as we lead into all this stuff right here. All right, so let me share this. I saw this. I found this pretty interesting. This is a new social media platform. Apparently Trump, it came out with something called Truth Social, which is a new app that was released on Monday. And from my understanding, people are being put into a waiting list on it. So we'll see what happens with this new Truth Social. I know a lot of people have been very upset with places like Twitter and Facebook and some of the censoring of different news articles and just what people are saying and opinions and different posters and things like that. The most recent was, Joe Rogan being all over the news for, what he says and kind of going against the mainstream and whatnot, and them trying to get him kicked off of Spotify and all these different channels. So we'll see what happens. A lot of this came from when Trump was kicked off of Twitter and all social media leading into the last election. So they're saying Donald Trump's new social media venture, Truth Social, appears set to launch in Apple's App Store Monday. And then I hear that it's going to be coming out on the Google Play Store at the end of, I believe, March. So they're going to be coming out with that. So just curious, anybody that's watching, are you going to join Truth Social? Are you going to participate in that? Are you going to get an account just to see what happens with it? Or are you staying far away from it and want nothing to do with it? I'd love to hear your opinions on that. And, is it going to be just a bunch of Trump people on there? Or is it going to draw enough attention where it's going to be more of a mixed a bag? Or is it just going to be that echo chamber? So we'll see what happens with that. And I'll be interested to see how many people do hop on there. I did register for an account myself. Just curious, what it's all about. But I am in some kind of little waiting pattern right now until they actually, I guess, authorize my account to let me into it where I can use it. So we'll see what happens. I'm at Snagy, S-Nagy on there. So at Snagy. One of the cool things with new platforms is you can pretty much register any name you want. I can't go on Facebook now and get at Snagy, or I can't get Stephen Nagy or Snagy.com because other people did it. So maybe go on, get a nice username and profile just to have it, just in case it does grow into something big and you can use it for business or something like that in the future. So we'll see where that leads.
Oh, Elon Musk says President Biden has pointedly ignored Tesla. I don't know about that. You think Biden's ignored Tesla? He seems to be pushing green initiatives, which pushes Tesla. I think Elon's just trying to get some advice or some extra feedback there, unless I'm missing the whole story. Elon says President Biden. I know Elon does, he's always poking at Bruce and poking at Biden here. And for those of you that don't know, I know that that's still playing, but when Elon Musk kind of pioneered the electric car, I remember it was feels like it was a decade or more ago. They had a Shell car and they were showing how fast this car went. And I remember when he could have cornered the market. He could have been the only electric car. He could have patented that and said nobody else can use this technology, but he didn't, because for the greater good of humanity, he said people need this. Every dealership, every single car manufacturer should have the ability to create electric cars, because that's how you push this whole initiative. Now, very wise of Musk to do this, because he was the front runner. He created the blue ocean. He was the first one out there. And because he was the first, just like Apple was the first for the iPad and all the things that they came out with, they're the front runner. It doesn't matter if the competition comes. The competition comes and builds him up. As the tide goes up, so does Elon Musk. It was a very smart thing for him to do, but it was a noble thing. He could have cornered that market and said, if you want an electric car, you have to buy a Tesla, because he could have patented every one of them. He's a smart enough guy. Some of you might even think Elon Musk is an alien, and hey, that's up for discussion. I think he very well might be, but I think, he's definitely got a strong company. He's doing good things. All the other manufacturers, if you watch the Super Bowl, are all going EV. I'm just going to give you my personal opinion. And Steven, I'd love your take on this. I'll never own an electric vehicle because I like my V8s. I like having the freedom to basically go and get fuel and drive where I need to go. Okay. I don't want someone saying, hey, we're just going to shut the grid off, or an attack from Russia or China that shuts the whole grid down. Now all of a sudden I can't go anywhere. My car doesn't start because it runs off electric and the electric grid's down. Oh, but you got a generator. How long will your generator take to charge your Tesla? Because my V8, I just roll up and I get gas. Oh, but they shut the pumps down? Great. I siphon fuel. We've seen the movies. Mad Max, you guys remember that? That was a V8. I just like them. So that's what I'm rolling with. I don't know about you. What do we got up here, Steve? You want to take this one? Russia-Ukraine's incursion could complicate the... Oh, yeah. This is an interesting one. So, folks, up on the screen it says Russia's Ukraine incursion, if I'm saying that right, could complicate the Federal Reserve's interest rate decisions. The Fed has announced that they're going to raise rates 7 times in 2022. But now because of this Russia thing, now because we're not going to be able to get oil from Russia and probably a lot of the other countries over there, now they're probably saying, well, maybe this Russia thing will slow the economy down. Maybe this Russia thing will curb this inflation so we don't have to raise interest rates quite as fast. I'll bet you any money. I'll put $1,000 up that what is going on will not impact the Fed's decision to raise rates, because all of you think the Fed's going to raise rates to curb inflation. Now, that's one piece of the equation. The Fed has to raise rates because the Fed knows we're at the end of the cycle. The Fed knows if they can't continue to print money and keep stimulating this economy, this overblown, speculative, bubbled out economy with extra printing, it's all freaking over. The infrastructure deal didn't make it through. They couldn't print that extra, whatever, 3 or however much money they were going to print, 3 trillion or so. So now where are they going to keep stimulating the economy? Well, they got to print money. What is a great way for the Federal Reserve to print money? If any of you are thinking war, you are absolutely correct. Because the richest families in the world, the Rothschilds, the Rockefellers, all of them, they fund every war. How do you think countries get money to fund wars? There you go. The central banks fund wars. It's a money-making proposition, and it's sick as fuck because our family members, our friends, our countrymen and women die to fund wars. But it is what it is. I hate to say it that way, but we can't control what the Fed does. We can't control what Russia does, and we can't control so much what Biden's actions are to this. The question we all should be really facing is, should we be putting our attention on what's going on in Russia and Ukraine, or should we really fix the problems we have in our own country, the problems that are very evident, the divides, the political tensions, everything you see, the convoy that just started, the convoys that are going on in Canada, okay, to curb what's happening in Canada. The U.S. is becoming what Canada is, and you don't want that. That's the real war we have to fight, and that's the first place we should focus our energy. But no. Look over here. Look over here. Russia, Ukraine. Let's focus all of it on the news. Have you seen anything in the news besides Russia, Ukraine? You haven't. You're inundated in it. The only other thing you've seen is that Omicron and COVID cases have fallen 90%. Take the attention off this side, put the attention over here, because folks, the Fed's got to print some money, and we need an excuse. So he's talking about the Dow Jones Industrial Average. And he's looking at a 5-year chart. He's looking at a 6-month, a 1-month chart. So go back to the 6-month chart. Oh, 1 day. Well, look at that sucker. Okay, right there. Look at that. That's your portfolio dying. That's the beginning of what the big storm is going to bring. But that's just the beginning. That's not even the first dip, folks. If you look at your portfolio and you look at your retirement account and you compare it to right there, the Dow Jones Industrial Average, how much money have you lost? Some people earlier were saying 20,000. If you think that's bad, just wait. It's going to get a lot worse. There you go. Look at that steep drop down. And you know what? A lot of people, when they look at this is a 6-month chart. People think that the markets keep going up because the media wants you to think that. One day you see the market's up 200. The next day it's down 100. The next day it's up 60. The next day it's down. It's going sideways. That chart proves it right there. Look at that. Sideways movement. Maybe a little bump there, and that's a 5-year chart. That's not a little move, but you can see right there, 2020, that big dip that he's showing, that's COVID. Been a hockey stick straight after that, but then it flatlined. Everybody thought the markets were continuing to go up. It's a flat line. And now we're on our way back down. I don't care what chart you look at. I don't care whether you're looking at what's behind me or anything else. We are due for a big correction, a big drop. And I have a strong feeling based on studying history, studying specifically the Great Depression. We are in for the next Great Depression. And if you're not ready for that, because none of us are, I hope I'm wrong. Like, you know, in life, sometimes we never want to be wrong. We always want to be right. This is that one time where, folks, I hope that I'm wrong. I hope that Snaggy's wrong. I hope that DJ Illmatic is right but wrong when he thinks about whether or not the Great Depression's coming, because none of us want that. But when it does come, if you prepared for the worst and hope for the best, you're going to be much better off than right now just going loose and just buying assets because, oh my God, cash is trash. I can't keep cash. I got to put it into risky assets. That's because that's what they want you to do. They want you to take your best dollars, your most valuable dollars, which are today's dollars, and they want you to put them into risky assets. They want you to keep the market propped up because they know what's coming. The Michael Burrys and all the big insiders, the big hedge funds, they will gladly take all of your money back when the market goes the other way because they're already ready. They're already on the short positions. They know what's coming. They know how to play the game, and they will beat you. They might have beat, Burry with Reddit, with GameStop and with some of these other AMC garbage stocks, the meme stocks, but they will not lose the overall war. They will be victorious in this one, just like they have every other period. The question is whose advice are you taking? Are you following the talking heads? Are you listening to your Uber driver telling you, oh, you should buy this shit coin, it's going to the moon? Or are you actually following history and following cycles and patterns and actually listening to the things that really matter? And if you just don't even know who to listen to, the best thing to do is be fearful right now. Sit on the sidelines, bulk up on your private banking, bulk up on your treasury bills or your treasury bonds, 20 and 30 year preferably. Sit in the safe asset classes and wait for the show to go on. Feel like sitting there waiting for the 4th of July, fireworks, you're popping your popcorn, you're drinking your soda, and just waiting for the works to start. And when they do, man, is it a spectacle. Imagine being there when this whole market crash happens. You're sitting on the sideline, you got your popcorn ready, your soda's there, you're just waiting to see the show. And then you take action.
So I hope you guys enjoyed that episode. We're putting up tons of them, but I think if you like this one, you'll probably like that video as well. Click that alert button, actually smash that alert button, and you'll be notified every time we put a new video. So we'll see you on the next episode.